So, what's really going on in the markets right now? We're going to spend the next few minutes diving into these huge forces that are pulling everything in completely opposite directions. Is the market's recent comeback the real deal? Or are there some serious risks lurking just under the surface? Let's get into it. Right now, the market feels like a classic tug of war. Over on one side, you've got the bulls. They're looking at big tech making a comeback, and maybe more importantly, they're seeing signs that inflation is finally starting to chill out. But then on the other side, the bears are pointing out rising bond yields. That's basically the cost of borrowing, and they're worried the whole economy could start to slow down and drag everything with it. This is the big fight we're going to unpack.
Okay, let's jump right in, starting with the big picture. Here's your high level summary of where things are at so you get the answer first, the lay of the land right away. So, here's the bottom line. US stocks, they're kind of mixed, but they're definitely leaning positive, and that's almost all thanks to that tech rally. Crypto is starting to recover, which is a good sign that investors are feeling a little bit braver again, but yeah, everyone's still pretty cautious. And the big economic story that's driving everything, it's all about inflation and what the central banks are going to do about it. All right, let's zoom in on that first piece, US stocks. Is this recent bounce just a flash in the pan, a little relief rally, or are we actually seeing some real signs of things stabilizing on Wall Street?
The overall feeling is, well, it's cautious optimism. The market's been choppy, there's no doubt about that. But the main thing to know is that big tech stocks are acting like an anchor. After getting beat up for a while, they're showing some real strength again. And that has a huge psychological effect on the entire market.
And this really breaks down all the moving parts, doesn't it? On one hand, you have company earnings, especially the insane momentum from AI, pushing things up. But then you've got all the big economic data, like inflation and jobs reports, and of course, where treasury yields are headed, kind of pulling in the other direction. And just to make it interesting, a geopolitical headline can pop up and change the whole mood in a heartbeat.
So that's the million-dollar question, right? With all these things pushing and pulling against each other, which one is actually in the driver's seat at this exact moment? And the answer, for now anyway, is what we're calling softer macro. Look, all that really means is that the latest inflation numbers came in cooler than everyone was expecting. And that is fantastic news for the market because it makes people hopeful that the Fed might ease off the interest rate hikes. And that's basically a green light for growth stocks, especially in tech, to really take off. Now, this tech-led recovery, it's not lifting all boats equally, not even close. So let's pop the hood on the market and see which specific sectors are actually winning and which ones are getting left behind. What's so interesting here is how different everything is. I mean, look, tech and AI, they're in the green, bouncing back hard, just like we said. But then you glance over at energy, it's in the red. Why? Because oil prices have been sliding. And financials are just kind of mixed, waiting to see which way the economy is really going to go. It just proves this isn't a market where everything goes up together. You have to be really specific. So that's the stock market. But what about its wilder cousin, crypto? After taking a hit, digital assets are also trying to make a comeback. But the story here is just as complicated. And we are seeing some real relief here. Bitcoin has fought its way back over that key $60,000 mark, and Ethereum is also taking back some important ground. Now, for the whole market, this is a pretty good sign. When you see crypto start to stabilize, it usually means investors' overall appetite for taking on risk is getting a little bit better. And, just like stocks, crypto isn't off in its own little world. Its fate is tied directly to those big economic trends, things like what the US dollar and bond yields are doing. Plus, what the big institutional players are doing with their new ETFs is a huge, huge factor now. But the one thing that never changes? That short-term volatility is absolutely still part of the game. Okay, this brings us to what I think is the most important part of all this, connecting all the dots. We've seen what's happening in stocks and crypto, but now it's time to zoom out and see the one big force that's pulling all the strings. This right here. This is the chain reaction you have to understand to get what's happening. It all starts with one thing. A report shows inflation is a little softer than expected. Step 2, that immediately lights up hopes that the Fed might give us some relief on interest rates. And then step 3, that hope is the fuel that powers a rally in riskier assets, like tech stocks and crypto. It's a straight line, direct and powerful. And it's not just the economic numbers either. Politics and policy play a massive role. Take this for example. The news that a deal was struck to keep TikTok running in the US, well, that was seen as a huge win for tech sentiment.
It took a massive cloud of uncertainty off the table, and it's a perfect reminder of how a single government decision can directly boost investor confidence.
So this leaves us with this one final, really fascinating question. You've got these two colossal forces on a collision course. On one side, you have the incredible power of technology and AI just fundamentally pushing businesses forward. And on the other, you have the immense influence of government policy and central banks. So which of these giants is going to win out and actually shape where the market goes from here? That's the key dynamic to keep your eye on.